Hello traders, Gary Wagner here, just after 11 o'clock in Honolulu, 5 o'clock in New York. It is Tuesday, 23rd day of October, 2018, and this is the Daily Report for gold and silver. Nice upside moves in the precious metals complex as a whole, with gold moving up almost $9, a net gain of 0.7%, and currently tracking at $1,233.20. Of course, we have a long trade on, and we'll talk about this move in gold and its implications when we pull up our technical studies. Silver tracked over 1% higher, 1.15%, gaining 16 cents on the day, and is currently trading at $14.75. Platinum up over 1.5%, a $13 gain, and is currently at $835, but the biggest mover of them all was palladium, continuing to surge to higher ground, gaining almost $20 on the day, currently trading at $1,127.30. Now, the dollar was slightly weaker today, so it did add a little bit of tailwinds, but the vast majority of these gains today is directly attributable to buying within the market. And one of the primary reasons that the metals moved was a stock market under extreme pressure, not only here, but really starting in China, and a global sell-off of equities. Now, the Dow Jones Industrial Average did close lower, and it closed lower by about 125 points, but the real story is the low that it hit when it traded to its low down over 500 points in trading before recovering today, and it's currently sitting at 25,191. Standard & Poor's lost about 0.5% at 2740, and the composite index also lost about 0.5% at 7433. Traders, as we have been speaking about over the last couple of days, actually the last week, it is this 100-day moving average that is a key indicator of potential resistance. We saw that throughout the entire last week because every single trading day last week up until yesterday, the market opened below the 100-day moving average. It traded above the 100-day, but then closed below it. That all changed today, and in response to a global stock market trading lower, especially in China, carrying over into the United States, we had some real weakness in equities and some incredible strength in gold. As you can see, gold actually traded to an intraday high of $1,243 before trading lower and selling off. Now, it did close above the 100-day moving average, but to give you an indication of how closely gold pricing was following equities, I need to put those charts up side by side. And traders, we are looking at a 30-minute candlestick chart with gold on the top and the S&P 500 mini futures on the bottom. And what you can see is as the market sold off, this is the beginning of the day, the 23rd here, but as the market sold off and moved to lower pricing, we saw gold actually climb, this being the intraday highs of the day as the market traded around 1243. That would be this candle here. Now, the stock market did recover in the latter part of the trading session, as we can see here, and as it recovered, we had gold prices softening, giving up roughly half of the gains on the day, but still closing a respectable $8.60 higher, currently at $1,233 per ounce. Now, we do have a long position from 1227 and change. We are looking to raise the stops up, and we will send out a special trade alert this afternoon with the exact price that we want you to move that stop to. Therefore, traders, maintain your current long position and look to trail your stop up later on today. There is no doubt that gold had a respectable upside move today, but that upside move was actually dwarfed when we look at palladium futures with a net gain today of $19.30, almost a 2% gain on the day, currently at 1127, and it is coming closer and closer to being in parity with gold, which I believe will inevitably happen over the next couple of months. What is interesting about today's move is the highs, because when we look at the intraday high and it closed just off of these highs, selling off after hitting $1,137 per ounce, which is just above these highs that were seen in February. It then began to sell off, but sell off ever so slightly. This is a very logical place that if we are going to see any kind of profit taking or backfill, we could see it here because it is at such a key level. And traders, to give you an idea of how significant today's closing price is, we really need to move it into a monthly chart to bring in all of the data that I'm about to show you. Take a look at this current pricing at $1,127 per ounce. We can see that in February it hit an intraday high, actually just at this price point, but it closed well below it, actually closing for the month closer to $1,050. To give you an idea of when the market traded this high, we have to go back in time to look at the historical highs, and what you'll see is that we are now at the all-time record high in terms of palladium pricing. Palladium has never sold for this much money per ounce in the history of trading. And that, traders, is absolutely significant. Now, where it will go from here is going to be a lot trickier to ascertain because, traders, we are now in new and unknown territory. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow for the next update and review. Have a great day. Bye-bye.